Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from ForexPeaceArmy.com. As usual, we will talk about the euro currency. Well, yesterday we said that since this is the first pullback in the long-term bear trend that has held from the November of 2011, well, usually this pullback can't last forever. So somewhere at some point market will stop this pullback and should show the retracement. And since this is the first pullback, the retracement should be deep, at least the 618 support of the whole swing to the upside. Because if market will not do that, this will be some kind of the V bottom. That is not very stable, at least stable as the double bottoms, W bottoms. So that's why the first pullback usually sell off by new participants who would like to join with this bearish trend, and that usually leads to the deeper retracement, at least at 618. But to estimate the point from which this retracement could start is really the task. Well, speaking about the current environment, we could say that probably market could start this retracement right from that area, since we see that this thrust is already greater than the previous swing to the downside. That could indicate the reversal on the market, or at least some deeper retracement to the upside. Well, this is some kind of resistance, since this is monthly pivot point that market has traded finally yesterday during yesterday's trading session. Market has formed this shooting star pattern. Okay, on the daily time frame has reached this fib resistance 131.47. That is the first possibility, and it worth our attention. The second possibility is market could proceed a bit higher to that area of confidence resistance 131.97, 132.40. Besides, this is the major fib resistance of the whole swing to the downside, of the whole move to the downside from the previous maximum around 145. Well, that's why this level seems more preferable and stronger, and retracement could start from that level. It looks more reasonable. Also, take a look that inside of this range stands this high. It's 132.24 is the high of the between second drive and third drive on the daily time frame, our three drive buy pattern that we have discussed. So that is the logical target of that pattern, and it looks reasonable that market probably will hit it, accomplish this pattern, will reach solid resistance and turn to the downside. Well, both of these scenarios are acceptable, and both of them could realize on the market. And based on the daily time frame, we can't estimate where a particular market will stop, because for that purpose we need the intraday charts. So let's try to understand what is happening and is currently going on the market, and what we could expect during today's trading session. The first intraday chart is not quite common time frame. This is 8 hours chart, not 4 hours, 8 hours chart. Well, I use it because it's a bit contracted, and on this chart you could see clearly the three drive buy pattern and all Fibonacci framework that could be done in the current swing to the upside. Okay, now you can see this is the first drive. The second drive stands 1618 extension of the first. The third drive stands at 1618 extension of the second. Yesterday we said that probably market will not start any retracement to the downside till it hit that level. So that has happened. Market yesterday creeping and creeping higher, then shows some small jump to the upside, then reverse to the downside. Besides, I choose this 8 hour chart because here you could clearly see some kind of bearish engulfing pattern. That's really perfect bearish engulfing, and that could be the clue for the potential trading to the trading session. Because if market will break that level, take out this high of this pattern and continue move to the upside, it might seem that three drive could treat it as fail pattern, because market should not continue move to the upside above the target of this pattern, above the final point of this pattern, and should not close above that level and accelerate further to the upside. If this will happen, then probably we could say that the 3-drive sell pattern has been failed, and we should expect the reaching of the 132.20, 132.40 area as the next solid resistance area on the daily time frame. Hence this point is 131.86 is the crucial for the bearish scenario. If this pattern will start to work, then the minimum target, the target of this pattern, is that low, the low between third and second drives. It's 129.33, and it stands below the solid area of support. This is some kind of double confidence support, if you could say that. Solid support area 130 area roughly. It's right here. Next is 129.72 is the 3-8 major support from the whole swing to the upside. So you can see market should break all that levels to reach that low is 129.33. Well, and probably with that market, some retracement on the daily time frame that we just have discussed could start. Deep retracement, that I said that if market will reverse from that area, it should show some deep retracement. That level is 128.41. It's minimum 618 retracement from the whole swing to the upside. Maybe this pattern will be the triggering pattern of that potential retracement. Who knows? So that is the levels that we should watch for today's trading session. If market will hold there and returns to the right back, then probably we could expect move to the 132.40 area. Well, to say that market will reach that level and market should accomplish minimum this target, the target of this 3-drive pattern. On the 4-hour time frame, nothing particularly interesting compared to the previous chart. One thing that I just want to point is the trend. The trend on the 4-hour time frame is bearish. It's right here. The levels all are the same. That's on the previous chart. On the hourly time frame, we also see that trend holds bearish, and we have this. I do not want to call this like the head and shoulders pattern because it's not quite harmonic and the shoulders is a bit shallow, it's very flat. Well, but some kind of reversal, as you can see. Maybe this just in a row with the bearish engulfing pattern on the 8-hour chart. But here we have this extension to the downside. A, B, C top. You can see that 618 target stands 130.54 and 100% extension stands at 130.13, right inside this solid area of support. So that is agreement at the confidence support area. Also take a look at the 4-hour time frame. You could see that right in this area stands the previous area of resistance that market has tried to break for 3 times, pull back and then break it. So that is really significant area. So what we could do today? First of all, since 4-hour time frame and hourly time frame trends hold bearish, and we have some kind of the reversal pattern right at the area of resistance, this is not the time to enter and jump in on the long side of the market currently. We should wait for the pullback. The first area to watch for, I suppose, that one. It's around 130.30 area. It's right here, because that is probably could become an agreement with this ABCD pattern, completement point. If right in that area hourly trend will shift to the bullish side and you can see some reversal pattern that market will find the support and starts to accelerate further to the upside, then probably this could be the sign that probably market could accelerate further to the upside to the 132.20, 132.40 area. Well, but better to enter on the long side of the market if you still would like to do that when the hourly time frame and 4-hour time frame will shift to the bullish side. So you can see some market will will complete this ABCD, then start to acceleration further. Trend will shift to the bullish side, and later on the nearest fib support, on the 3-8 support, you could try to enter on the long side. This will be relatively simple and safe possibility to enter on the long side of the market. The same is for the 4-hour time frame. If market will continue to this area, wait when the 4-hour time frame will shift to the bullish side. If you are bearish and you would like to enter on the short side of the market, well, probably you could do this right now, since that is just a retracement after initial swing, your risk will be relatively tight because your crucial point is right here, 131.86. So if market will accelerate further above that area and will cancel the bearish pattern on the 8-hour chart, our bearish engulfing pattern, and will hold above that top, in this case market will cancel 3 drive sell. We could treat that as failed pattern, so that will mean that probably market will continue move to the upside. Well, if this will not happen, then you probably could get some profit by this ABCD pattern, or even if market will proceed lower to the target of the 3 drive pattern, if this will be really reversal on the daily time frame and market intend to take out this low 129.33. So it's 2 different ways to act depending on what is your view on the market. Would you like to enter on the short side of the market, or would you like to buy? Well, that's all for today. Trading according to your trading plan. Watch closely for the crucial levels, important levels in today's trading session. That's this confidence support, and that is this one. Hi.